and welcome. I am Piers, CEO of RDX Works, a core developer of the decentralized finance protocol Radix, a public ledger entirely focused on bringing DeFi into the mainstream. This is our podcast, The DeFi Download, a show about decentralized finance and all things crypto, where we dive into the details of the projects, assets, and services that are powering the DeFi revolution. Today, I'm joined by Tascha Che, PhD in macroeconomics, startup technology investor, founder of my Soundwise, and general deep thinker about DeFi and crypto. Tascha, thank you so much for coming on the show.
Hi, Piers. Thanks for having me.
Well, I know that a lot of the sort of people in the Radix community follow you avidly on Twitter. I think you have an incredible Twitter feed for deeper thoughts in crypto. People I think a lot of people tend to not take the macro perspective, and it's great to see that sort of macro perspective that you bring to bear when thinking about the space. I think the first thing I'd like to start with is how did you go from a PhD in macroeconomics to cryptocurrency and actually spending a lot of time looking at Web3, and what is it about crypto and Web3 and public ledgers that you think is so exciting for the world, for the global economy, for people in general from now?
Yeah, totally. So I've been, looking at the space for not that long. I'm definitely not an OG, not a lot of people, they bought a Bitcoin in 2013 or something.
Right.
To me, I wasn't interested in Bitcoin because it was store value asset better than gold with some better features than, some metal that you can store in a vault. Okay, that's fine. But is that all that interesting? Not to me. So, right. But, once I started using DeFi, that's when I realized, this is so much bigger than I originally imagined. So just to, give a bit of my background, as you mentioned, I have a PhD in macroeconomics, and I have worked in the field of macroeconomic consulting for many years. And part of my, work is to advise countries on their economic policies. And I'm also a technology investor, and I'm a startup founder and investor. So basically, the Web3 space is kind of combining two of my greatest passions, is the economy and technology. So when I look at the space, the huge potential I see is really from an economic perspective, is that Web3 can become a whole new way to distribute economic values in society, to distribute the economic pie that we call GDP in society. So traditionally, there are mostly two ways to distribute this economic pie. We call them labor income and capital income. Capital income is your interest, dividends, profits, so on and so forth. And labor income is wages and salaries and benefits, right? So that's how you get the value added of the society to get into the hands of people who participate in economic activities. But, as we know, there are a lot of problems with these ways of distributing incomes, especially in the last 20 years. We had a huge wave of globalization, automation. So all these trends are exacerbating income inequality in society, for example. And to me, it's the root cause of a lot of the social unrest that we see and social instability that we see in many countries, both advanced and emerging market economies.
So you're in the sort of the labor capital split being one of the most important indicators of sort of inequality or social unrest, and at the moment we are moving more towards a lower labor, higher capital split in the economy, and as a result, you're getting greater injustice in terms of a small number of people able to leverage high scalability, product sets that do not require a large amount of labor to do it. And as a result, they earn incredible amounts of money, but everyone else is getting small amounts of money as a result of so much automation. Is that what you are referring to here?
That's definitely a part of it. And, this trend of labor income going down as a share of GDP has been going on for decades,
Right.
So this is not a recent trend. It's been going on for decades. And there are multiple reasons. There are, tax reasons. There are reasons like globalization. There are reasons like technology progress, right? So it just causes these disruptions in the whatever old equilibrium that we had in terms of distribution of value added. But I think with Web3, we are seeing a more participatory economy in the sense that, like when you're contributing to a DAO, or when you are staking in a DeFi app, when you are participating in like as a validator on the layer 1 blockchain, all these, I would broadly, you can broadly categorize these, using crypto native terms that would be like staking income or like, LP income or, but all of those I see as that they're sort of a combination between a capital and a labor income, actually. But but the entry barrier for accessing those incomes are much smaller because, you have $1, you can, delegate a staking on the layer 1 blockchain and earn yields, which basically comes from, if you think about where does that yield come from, right? So you stake on Ethereum, on Solana, whatnot. That staking yield for the validators, they come from two things: transaction fees on the platform, which is a form of tax, right? So it's like just like government takes a cut of the GDP that's being created in the economy every year. The platform takes a cut of the economic activities that are generated on the blockchain platform, right? So it's the equivalent of tax. So it partly comes from the fiscal revenue of the blockchain platform, and secondly, it comes from the monetary signage of the blockchain platform in the form of new token emission, right?
Right.
So, but that new token emission is only possible if the platform is growing. And they're growing to the extent that there is an underlying demand for those tokens. Otherwise, the price could drop to zero tomorrow, right? So even that signage income, that monetary emission, is supported by the growth of the economy. Of the underlying blockchain.
That's interesting. Let's jump into those two just quickly, because I just to provide a couple of counterpoints there. Like the fees being taxed would be true if there was some if those payments went into some pot for social good, right? As in, like there was some. As in, when I say social good, I'm thinking of a public ledger like a country. And you have the government of the country, and the government of the country taxes the people ostensibly to be able to invest in things that make the country either more productive for those people, or safer for those people, or more equal for their starting point in life, be what it is that they're investing in. But that's ostensibly what the budget of the government is for. However, in the case of a public ledger, you have node runners who are running the network, and they are providing a service to make sure that the network is up and running, and they receive fees and seigniorage from the network as a result of that. But they're not actually, they're still doing it under a private profit motive. They don't take that money and then turn around and necessarily reinvest it into public goods for the ledger.
Yeah, I mean, but they're running the rails of which is providing a key infrastructure for the platform. If that doesn't exist, then there's no platform, right? So that's like a bare bone most important infrastructure is the validators. So yeah, you can say they're doing this out of profit motive, but that's how things should be, and also that's why I don't think that, just like you said, public platforms, you need to have some public goods, right? So there has to be people who are investing in the public goods and thinking about those public goods. That's why I'm not in the camp that you can just run a public blockchain platform, fully automated, fully programmed, fully quote unquote decentralized, there was nobody looking at it. I just don't think that's possible, and of course it's possible. You can, a blockchain does it, Bitcoin does it almost like that, right? But even Bitcoin, there are, you vote for things, right? You vote for the direction of the platform, where it's going. And to me, that is not, the governance of Bitcoin is not a good governance, because to me, one of the reasons you have seen much slower technology progress or changes that are happening on the Bitcoin blockchain compared to other newer layer ones such as Ethereum and a lot of others, obviously, is exactly because you don't have an effective governance mechanism put in place. There's nobody actively thinking about, what's the vision for this thing going forward. And even if there are people, thinking about this, they're coming from a very a defensive, how do we protect the status quo, the kind of perspective. So I just don't think that would be a effective governance for any entity, whether it's an autonomous entity or it's a traditional entity.
I 100% agree. I think that there are good corollaries. I mean, I love the way that you compare public ledgers to nation states and the idea in which that we are essentially creating digital nation states through public ledgers. And if you look through history at, as you say, like the concept of a nation state has actually been evolving for a very long time. And there isn't the modern nation state is actually not that old. But if you look through history at the difference between societies in terms of how successful they were, one of the big determining factors is whether or not they were dogmatic societies or whether or not they were flexible societies. Dogmatic societies were able to protect their own, but they weren't able to expand because they weren't able to adapt to new ideas and tended in time to be conquered. Whereas those that are non-dogmatic, those that are flexible, that are open to change, that are open to new ideas, that actually adopt new thinking, were much more successful societies. The Roman Empire being, depending on what point of the Roman Empire you look at, a good example of a flexible society, and so things like the Spartans in ancient Greek being a good example of a dogmatic society that actually failed in the end, or was conquered. So, if we think about Bitcoin from that point of view, you can look at Bitcoin as being very able to hold a core set of beliefs as a collection of people, but it's inward looking. It doesn't adapt with new ideas and that's actually pushed a lot of people out of Bitcoin into the other places like Ethereum or the other layer ones where people are finding more openness. And so in a short period of time, you can say, well, the Spartans were very successful. They were great warriors. They were able to protect themselves many times, and that dogmatism shaped them into strong people. But in the long run, they actually were overtaken by the advantages that technology and new thinking brought along.
Yes, so I totally agree with what you said, and sometimes people ask me, okay, why are you drilling down this concept of this analogy between nations and blockchain so much? I'm like, I did not put out this analogy casually, okay, because I do think this is the national economy is the closest thing I can think of from an economic structure point of view that to public blockchains. Because if you look at what is the economy, it's a platform, an ecosystem. It's a place where people transact with each other. People is there consumer consumption, production, trade happens, and that's how economic value added gets created in society. And you look at the public blockchains, that's exactly the same thing, with the exception that it's totally virtual, right? So and also in the national economy, in the physical space, why does that nation even exist? You can talk about it from the sociological, from the political point of view, from the point of view that you have a tribe of people, they need to protect themselves, and you have a nation that has the military force to protect this physical geography, right? So, but from a economic point of view, you can also say the nation state needs to exist because there needs to be the entity, the organization or the governance structure in place to invest in public goods, to invest in a safe and orderly space for people to for people to transact, for the consumption and production activities to happen. And it cannot be just a complete laissez-faire, market system where nobody is there to steer things. So it actually does everybody good when you have competent steerer of the so-called economy in the system. So in that sense, I see the public blockchains, whatever governance scheme that they use, you usually you look at a public blockchain like Ethereum, for example. The chain itself is completely permissionless. It's not an organization. Anybody can build on it. It's totally open. And pretty much like in an economy, you can start a company, you can buy things and do things whatever the hell you want, and the blockchain economy provides even more freedom in that regard. But on the other hand, you do have organizations like for example for Ethereum, you have Consensus,
right,
which is a entity, right? I don't know how they're structured. Is they're nonprofit or a company? But the Consensus was there. I think they created MetaMask. They created Infura.
Yep.
They created a bunch of different things. They did a lot of things to educate developers. They did a lot of things to connect the different players in the Ethereum ecosystem to make things happen. Otherwise, Ethereum wouldn't have had the mode it has today. If you look at Ethereum today, why is everybody using Ethereum? Why is the EVM even a standard? Because at least part of it is because it's kind of you have all the toolings in place. You have a lot of systemic liquidity already in the Ethereum ecosystem, and it's just much easier to build on that platform. So those things did not happen by magic.
Right.
So someone was actively thinking about those things.
And very strategically as well. I think your analogy of nation states is apt here. Like you had to convince people to come and build their business in the economy of Ethereum, and to do that, there had to be some really important initial things thought about. The first was, well, how are users going to interact with your business? Well, that's where MetaMask came along, and it was super early. Like dApps and DeFi had not emerged at all at that point, but this idea of needing some webhook to a front end that allowed people to interface with decentralized applications was critical. And then like Infura, like this idea of, well, if you're going to build a dApp, you're going to need to be able to have information that you can present to the user, and you need to have an SLA, a service level agreement with something that you can do that. But I think that even more than that, people are now looking at grants from this point of view as well, like the Ethereum grants into the Ether 2.0 and the cryptography research and the scaling research and the sharding research and all the kind of stuff that came from there is a great example of, as you've put in your great tweet about the 7 ways in which crypto companies can or public ledgers can think about industrial policy. One of them is research, and that's clearly what Ethereum is continually to do as well. So I think that it's playing out in that way. The debate often seems to be, is that a foundation? Is that a for-profit company? Is that a command and control, or is that a decision by committee? Like, how do you create a system that works well when you have so many stakeholders? And I haven't seen a good version of that yet. Do you have some ideas of what that might look like?
Yeah, I mean, to me, intuitively, I think this would be some kind of it should not be a for-profit company as in the traditional sense that you have shareholders, that traditional company like if you are Facebook. Right. You are supposed to work for your shareholders, and your bottom line is the most important thing, because the purpose of your existence is to make money for your shareholders, right? So that cannot be the purpose of existence for a public ledger, and then, because you are basically the guardian of this permissionless, public space that people will interact and transact on, and The purpose of this, this governance organization, however it's structured, one of the purpose for it existing is to correct some of the, market failures that exist in a completely, laissez-faire system. Market failures being the traditional, the typical definition of the market failure is that there are certain goods and services that needs to be provided in a ecosystem, but it's not sufficiently provided by the market mechanism or by the private sector, because the benefit of providing these goods and services cannot be fully captured in terms of profit by the entity that creates it. That's why it's undersupplied in a economic system. So that's why the quote unquote government in traditional economies need to exist partially to correct these failures. So you can say there are same things, including the ones that we talked about, right? The public infrastructure, the dev tooling, the benefit of these things exist far outweigh any kind of the profit that can be captured by the entity that's producing this.
Right.
So I don't think that the private sector company model will be the way to go for organizing blockchain governance.
It's interesting, and I'd like to, before we sort of go down the road of governance, because I think it's a really interesting one. I wanted to circle back to a previous point that you made right at the top, which is that you believe, or you see a path in which sort of public ledgers and Web3 are going to more fairly or equally give sort of that labor capital split, or at least give people more of an access to that. I suppose the cynical counterpoint to that would be that, well, Web3 is just an easier way of making programmatic finance. And there is going to be the owners of capital will come in and they will dominate the Web3 space in the same way that they've dominated the traditional financial sector. Sort of what you say to people who maybe outside of the crypto bubble would look at this and go, well, this is just creating a new set of insiders, or there will be another set. The old insiders will just come into this and dominate this as well.
I think as anything in the world, the reality is not black and white. I'm sure things like, as you described, will happen, and they are happening a lot, right? So, of course, for people to invest in the space, there has to be a profit motive, right? So, there is a reason to be cynical for sure. But when I look at the space, what I see is there are some differences, like fundamental differences in terms of underlying parameters that sets it apart from existing systems that we have. For example, one of the things we mentioned in terms of as a layer 1 or layer 2, layer 0 blockchain, I don't know, you collect transaction revenue, you have your token emissions, and people have a accessible way to actually pledge their capital onto the to the blockchain platform and earn a share of that economic value added that's being created on the chain. So in a sense, you can say, oh, we had this before with nation states. That's called welfare. It's government collects tax revenues, and government has programs and social obligations, and it sends money to pensioners, for example. All these things we exist in traditional structure. What's the difference here? The difference here is that value loop is much tighter now because you have a programmable structure that it's a way more transparent in any older structure that as I described. So it's for a large part of it is programmable, and you can see this is the mechanism working, and that value feedback structure from value generation and that value being returned to the participants. That loop can be a lot more tighter. Because of the programmability, because of the regime of blockchain. So I think when you introduce those things, you open the door to to some new possibilities that the world hasn't seen before. It's not just it's just same old as Web2 as analogy would be. In the 90s, we had, when the internet just came out, you have like these online cafes or, people
Web
just
cafes,
like online chat rooms, right? But it's like very preliminary, like, Craigslist, that kind of thing, right? So, and then you have social media. But when social media just came out, people are like super skeptical. It's like, we had this before. It's called online forums.
Right.
How you do the same thing. How's it different
from IRC? Yeah.
Exactly.
Yeah. Right.
Pretty much the same thing, right? People chat online. So what's the big deal?
Right.
So, but you actually tweak a few things. You allow a lot of more innovation to happen.
Right. Yeah. The question. The reason I asked the question is because I think it's an important question to answer. There's two trends here. One is a long-term trend, which I think is, we have a crisis coming as a society coming forward, and I'll talk a little bit about that and see where you sit on this. And the other is the short-term trends of industrial revolution. So, like, I'm personally massive fan of the book Capital in the 21st Century. I'm sure you've read it as well. But he talks about this idea that actually, the only thing that disrupts the status quo of capital, like once those who have capital are established, it's very difficult to create a new class of capital owners unless there is a radical change in technology. And this happened at the dawn of the Industrial Revolution. This happened at the dawn of the age of the computer. This happened at the dawn of the age of the internet. It's happening now at the dawn of Web3. And the reason is because suddenly the technology has created all of this green space, this greenfield space where, because everything is so immature, you can create, someone with a good idea and some passion can actually create a huge amount of value. You look at the story of like Hayden Adams from Uniswap, who basically lost his job, wasn't even a coder, and then learned to code and eventually built Uniswap, and now that holds $10 billion in assets in like 3 years. Like, amazing story. And that story was repeated again and again. Like, we can talk about any of the founders of the Web3 DeFi, projects, or of the NFT projects and stuff like that, where they're creating generational wealth as a result of an idea and actually relatively short amount of work. I'm not poo-pooing the hard work that they put in, but like, compared to sort of how long it takes to build nowadays a traditional Web2 company, and the amount of polish that is necessary in every single aspect of it for you to compete for a new app on the App Store for the iPhone, or a new content creator on YouTube, versus how quickly and how much opportunity there is to create sort of new businesses in the Web3 space. And that's why I'm short term incredibly bullish about how much we are going to give opportunity to creators and college kids who are just coming out of college and wondering what they're going to do next, or people who are looking at the economy and when we go into this global recession, wondering or not where they should be looking to next, and where this I think personally Web3 is going to be one of the few bright spots of the global economy for a while. And so that fills me with confidence and happiness. But like, there's this other thing which we are seeing, as you've outlined, which is this sort of like capital labor split. And I think Web3 is going to, personally, I think Web3 is going to accelerate that. I think that there's going to be like while there will be generational wealth and there are many people to be excited about, I think this leverage of capital over labor is going to increase, and it's going to create greater inequality. And that's where we need to start asking questions about what these systems can do in terms of, as you term it, welfare or universal basic income, or things that can actually start to think about how you can have redistribution, because you have these systems now in place where you can have redistribution and have ideas of digital citizens who are part of these economies, and start to think in that kind of slightly more macro sense that starts to look even more like nation states and countries that are looking after their citizens.
Yeah, so I think I'm not sure like how much the like a manual redistribution that you can do that is also all very different from the Web2 or traditional societies. But what I see is in terms of income distribution, you talked about with the new waves of technology, yes, basically the new overlord come to replace the old overlords, entrepreneurs in society as industrialists, that like what happened in 19th century, 20th century, same deal, right? New waves of technology, new waves of entrepreneurs, they come to replace the old establishment, the old, upper class. But that is the old part. To me, that's the old part. Okay. The new part is that, is that I think there is a very direct income distribution change, but in terms of the distribution of capital itself, because if you look at traditionally how do you generate a capital income? You need to have capital invested first, right? Mm-hmm. So if you look at across different income categories in America, for example, most of the lower middle class, most of their capital is tied up in their primary residence. Mm-hmm. Okay. So basically the real estate you own as your home, that mm-hmm. is your biggest share of capital. Mm-hmm. And you receive kind of a quote unquote capital income, but it's implicit mm-hmm. in that sense that you save the rent, that you, mm-hmm. you don't pay the rent. Right. But so it's like an implicit capital income. Mm-hmm. But that is the biggest share of capital for lower middle income class. Okay. And but the capital income for the rich people, where do they come from? It comes from a way more diversified source, right? You mm-hmm. have real estates, and you have investment real estates. You mm-hmm. invest in private equities and venture capitals and stock mm-hmm. market, and so on and so forth. A bunch of different things. Okay, mm-hmm. So and my point is, in order to get to having that capital income, that itself is a tremendous barrier, because it's like you need to save a lot to actually buy a house, okay? And that is the first chunk of capital, most people will have. Mm-hmm. And that in itself is like a really, really high bar to actually mm-hmm. get to actually earn some capital income, okay? Mm-hmm. So, but with Web3, if again, like if you stake your token somewhere, mm-hmm. you have pledged your capital. You can have $1, no matter, okay? You have pledged your capital, and you can earn a yield, whether that comes from the income, the revenue of the application, the platform, or it comes from some monetary signage. Yep. All the same, you are collecting the capital income from that economic system from day one. Yep. You don't have to wait for like 10 years until I saved enough money to buy a house and then get a mortgage. Okay. Yep. So that in that sense, that immediately lower the barrier for people to get a capital income in the first place. Yep. So in that sense, that is a structural shift in terms of how that, the labor capital income split. I'm not saying there will be more share of income going to labor because of capital because of Web3. What I'm saying is more people will have the opportunity to become capitalists, essentially.
Yeah, I completely agree. I think that, like, for me, what this is exactly the same idea, in that, like, you have equality of opportunity for capital. It's the outcomes may be different because of what you choose to invest in or whatever, but at least everyone has the same opportunity to access the same, income that is available either through staking to DeFi protocols, or staking to secure underlying networks, or putting their capital directly to work in whatever way Web3 devises. Because what Web3 has essentially created is this disintermediation between the providers of liquidity, which on the other side is basically creating a yield for those who have capital that is not currently needed for some purpose, can now be put to use within the Web3 economy to create more liquid markets, more liquid secondary markets, which in itself creates its own benefit and yield back to those individuals, plus the security of the underlying ledgers. All of those do not disagree with. The thing the wider macro thing that worries me is that the tendency towards automation, the tendency towards increasing ways in which very small numbers of people can essentially create very large amounts of value, and that's an amazing thing from the point of view of the efficiency of the markets and sort of the and testament to the intellect of humanity's ability to create automation in the first place, which has been a trend that basically started from the Industrial Revolution onto now, but I don't see a good way in which that doesn't, without some sort of collective idea of what we want the end state to look like, it doesn't just end up in a very small number of people owning a huge amount of capital and everyone else not really owning that much capital in comparison. You're already seeing it with like billionaires like Jeff Bezos or Elon Musk or anything like that, and that's not saying that they shouldn't get the value for what they've added to the economy in the first place, but this is sort of more future looking to when AI comes in and more white collar jobs get automated and stuff like that. There has to be some point where we think about the very concept of redistribution. I think that's already starting in politics at the moment. I'm not sure where I sit at the moment. I go between both sides, but I'm interested to see your perspective on that.
Yeah. So again, I think the blockchain space is still like pretty far away from like actually actively redistributing the gains of society. I'm not saying that won't happen. I think maybe one day we will get to that place when the public blockchains actually becomes a formidable force of socioeconomic governance in the world. I think that's totally entirely possible will happen. As some kind of participant, like a blockchain platforms as a type of participant in the world economy. Rivaling the role of nation states. I do see that happen. It may take a long time, but I think that is not a small possibility. Maybe in the future, this is something, social policies would be something that blockchain platforms will think about. But just immediately, I think to your point of the worry about wealth concentration that is being generated by the new system that's called Web3. I'm actually less worried about that. Why? Because we are still in a very, very dynamic phase of the development of this space. So it's like, there are a bunch of people who hold Bitcoins and have benefited, like got rich from Bitcoin, right? And then people say, okay, Bitcoin are going to $1 million. I don't think so. Because if Bitcoin going to $1 million a piece, and given the distribution of Bitcoin ownership in the world, that would be a extremely destabilizing result. And and I don't think that will happen. Why? Because this is a new wave of technology, and actually multiple waves of technology. And the way to organize the economic activities that continuously being adopted right now. We are still, at the really initial stage of Web3, right? So you have like a first wave of adopters of blockchain, which is like the Bitcoin hodlers. And then you have the Ethereum maxis. And then you have, last cycle, you had a bunch of, people. I don't know if EOS maxis still exist, but
were there ever EOS maxis? maybe.
But maybe they didn't bet on the right horse, okay? But you like this cycle, you had Solana maxis, right? You had other things coming up. So you have like new communities being formed around like the second version, the third version of this concept of public blockchains. So why? Because part of it is just a self-interest, right? So if you're a newcomer to the space, you're like, okay, people have already gotten rich off of Bitcoin. Let me find something new, right? So that I can be rich too. So then you go champion the new communities and the newer versions of technologies, and as those grow, they will attract new competitors, and those new competitors will try to provide better products, and they will try to grow and try to build their own communities as well, and they will try to get a wider world to adopt their own thing. So you see these are like different waves of adoptions happening, and each wave is being propelled by people's self-interest. And more new people coming in to join this revolution. Okay. Yeah. So I think this is like just a continuous waves upon waves of adoption till the day that that Web3 is actually just like internet or telephones that we use today.
And the Web3 is boring and everyday.
Exactly.
Right. And ubiquitous. You have this really interesting idea of like modern ledgers and blockchain governance being a counterpoint to nation states. I'd love you to sort of explain what you mean by that in a bit more detail.
Yeah. So I wouldn't call it counterpoint, because that sounds antagonistic. It sounds like this is somehow going to dethrone the nation states. I don't think it will, because I think the physical economy is always an essential part. As long as you have a body, you have a physical existence. Unless we all ship our brain to be stored in some glass bottles, and we just fully live in the metaverse.
So do you not think that the entire economy will be subsumed by the public decentralized ledgers eventually, in that every single economic activity that we do will essentially be done via a public ledger? That's a leading question. I'm sorry if you don't believe that. That's fine.
I think a huge part will happen that way. But I don't think the physical economy or Web 2 or Web 1 will go away. Craigslist still exists today. I just used it last week. So, I don't think that will go away. I still go to shop in physical shops.
Right. But your receipt may be via Web3, right? And when you buy the thing, you may get an NFT denoting your ownership, and that stock keeping unit of that shoe is then updated in the back end on some database that is connected to Web3 to buy new stock
exactly.
It feels like it's going to be very interlinked if it's not entirely subsumed.
Exactly. I think you will have more integrations between physical economies and the virtual economies, and the virtual economies will at least a large chunk of it will be running on blockchains or some kind of other decentralized ledger technologies. So to me, I think the bottom line is I do believe Web3 will be huge, but I don't think it will be the whole world. Mm-hmm. But I do think the platforms, the governing bodies, the guardians of these permissionless public ecosystems, they will evolve to have to evolve to have a lot more features, to have a lot more responsibilities, and their policies or the way they change certain parameters on the platform will have a huge impact in the world. Just like today, Federal Reserve, they changed their interest rate. The world is like, oh my God, Fed changed the interest rate. What are we going to do? It's like, it's a big deal, because in fact, it has this ripple effect across the financial system, across different markets, across the world, right? So because just because the role that U.S. dollar plays in the world, and I see, there will be a day that similar things will happen when a large public blockchain platform decides to change, I don't know, the percentage of token burns, right. and how the transaction fees are, right. Parameters of transaction fees are collected.
Right.
So those will have a huge impact on the economic on the world economy, on the business cycles of the economy. Once blockchain actually becomes like a metaverse economy, becomes a huge part of the entire economy.
And how do you think that's going to be organized? Do you think that essentially it will look like government, that eventually that government is the the least worst way in which you create a stakeholder management system in which you're managing a public good?
I hope we will do better than the traditional governments, because the features of blockchain, you have information symmetry in a lot of cases. You have like transparency of how informations are being delivered, and you have this immediacy of action, right? You change the parameter of percentages of how much token is being burned, or the gas price of transactions. That effect is immediate, right? Unlike the government policies, it can take months or years to trickle down into having some effect. So and also you have the internet provides a way to actually collect people's opinions, right, to actually, crowdsource, solutions to problems, or, right, or proposals to solve a problem. That is way more efficient than how things could be done in, in traditional structures.
Yeah.
For example,
and you can see and you can observe immediately what the effect of these things is as well, because all of the information is also public. Like, what has the change of the transaction fees done to the transaction numbers? What's it done to the number of dApps that are sort of choosing to launch on this platform versus that platform? What's it done to the capital in the economy? It's like a chancellor of the exchequer having a real-time dashboard on the economy, but in a digital way. So, like, yeah, I think it's going to create greater feedback loops as well, right?
Yeah, exactly. But in terms of how this governance is done, is it going to be a democratically elected government body? I have no idea. I don't know. I think we will see different experiments.
Yeah.
But we are at a very, very early stage right now.
Yeah, I'd love to come back and have another conversation with you about just governance and like what's going well and what's gone badly, and like what lessons can be learned from current governments, especially as you have like this inside track on advising governments as well on at least monetary policy, but that sort of touches everything. It's been a fascinating conversation, Tascha. Thank you so much for coming on the show. And yeah, I hope to have you back again soon. Before we close, is there anything you would like to say to the Radix community, to the DeFi Download listeners, to the wider crypto community?
Yeah. So one thing I want to tell people is, like I said in one of my recent tweets, is you obviously we're in a bear market, and your portfolio not doing well, and everybody's very poor, and not in a good mood. But the thing is, I think we should be thankful that we are involved in this revolution that can potentially change how society distributes value forever. So I think we should feel incredibly lucky. And my thought is have some patience and have some conviction to keep building, keep working in the space. Since the prices are down, so you can save some time not checking the price. So save that time to actually work on some things that will potentially change the world, 5-10 years down the road.
What an amazing message. Thank you so much.
Thanks a lot, Piers.